So hold on just 1 second. And here we are live. Good morning. Yeah, good morning, everyone. This is Noura Al Masri. I'm an enrolled agent in another word, a tax professional. Let me just do this one. A tax professional. So I'm here today to talk to you about the new bill passed by Trump and the Congress, everyone. So, if you are here for the first time, let me know in the comment you are here in the first time for the first time, whether you are on YouTube, TikTok, Instagram, Facebook, LinkedIn, let me know if this is your first time attending my lives. I know I used to go live all the time. Now it's not as often, but I will be coming here more to talk about taxes and how can you reduce your tax bill to minimum. How can you make sure that you are not paying any extra amounts for taxes that you don't need to pay for. So if you are watching also in the replay, let me know. Hashtag replay. If you are watching on TikTok, say hi. Instagram, say hi. I mean, I had no idea like how to put Instagram, but okay, I just wanted to make sure like I'm with you all so we can get most of you so you guys can get the information about Trump tax bill. I know there is a lot of confusion, a lot of talk about, oh, is it good? Is it bad? Is it for middle class? Is it for lower class? Is it for business owners? What is it for exactly? Is it really good? Is it really bad? Now, just to be clear, the tax bill is crazy. It is like long. So we cannot cover everything today, but we'll cover as much as possible. So I have 10 points, 10 points I want to cover today. It's going to be important for most of you. So I'm going to cover some about like that is going to affect your personal taxes, like it's going to affect every single taxpayer. I'm going to also cover some stuff that is only applicable for business owners, but mostly, most of the things, it's going to affect all of you. So stay with me. 10 points. We'll see how long it's going to take us. And at the end, if you have any question, I'll answer your questions. We had a form, so some of you already put some questions. If I made sure like I have those questions in my points. If I did not answer your questions, make sure you post it in the comments. I'll be going live every Thursday at 3 p.m. Central to make sure I talk more and give you more details about everything. I don't know what's going on with TikTok because I'm new to TikTok, but it tells me to do this. I don't know what does that mean. I didn't want to read because I I am going to talk more about what's going on with the Trump tax bill. Beautiful bill, as he says, right? When I first heard that, like I thought like people are making fun of it, but it turned out that's the name of the bill. Well, it's a beautiful name, I guess. Anyway, so one thing I want you to know about the tax bill. When Trump was in office in 2017, what happened is he made the tax act job act job tax cut and job acts. So most of these laws that he passed and most of those reform, the tax reform that he did when he was in office in the first time, set to expire in 2025, which is this year. So next year for 2026, nothing is there. But Trump is here again, and he made a lot of the changes that he put in 2017 to be permanent. We're going to talk about some of those. So, we're going to talk about so many things today. 10 points I'm going to be make sure I want to cover for you guys. And again, put your questions. Hi Instagram, hi everyone, and hi TikTok. So, um tag your friends whatever platform you are watching from. Tag your friend, If you're on YouTube, send this link to your friends that who might want to know what's going on. And guys, if you're waiting until January 2026 or January at any year to start thinking about taxes, let me tell you, it's too late. You're going to pay taxes that otherwise you won't have to pay for. So let's talk about the changes now, and follow me, subscribe to the YouTube, follow me on whatever platform you prefer, so to make sure that you get all the tips, all the things that you need to know in order to not pay an extra penny in taxes. So let's move forward. The first thing that I want, of course, I have my notes because it's 10 points. I want to make sure swipe right. To, I don't know what you mean. TikTok, don't distract me. I'm, guys, I'm not used to this, but okay, let's do it. So the first point is permanent extension for the 2017 Tax Cuts and Job Acts. Of course, that has a lot of points, and we're going to talk about the second point. But this is a big thing because a lot of things, like I said, were set to be expired in 2025. A lot of things also were phasing out. Now he brought it back to us. So let's see, what did Trump do? HSA. If you are not familiar with HSA, that is healthcare saving accounts that you can open. Usually it used to be if you have a high deductible health insurance. So you have to have a high deductible health insurance, then you would be able to open an HSA account. And I know like a lot of you don't understand how beautiful is the HSA account. Everyone, in my opinion, should have HSA account. It's one of the best accounts you could open. You get to contribute in the account pre-tax, so before you even have to pay any taxes in that income, you contribute to your HSA account. And then after that, when you want to withdraw the money, if you withdraw it and pay it for qualified expenses, you get to use it tax free. So it's tax free totally. Your money is tax free. Now, the beautiful thing about it is you can grow your money whether you are in a self-directed account or in just regular market account. You can grow your money. So most people who know the game, who understand what they should do to be tax free, they don't use that money, they keep it growing. Because the beautiful thing about it, if you keep track and keep your receipts, keep track of everything that you have, and that's what we do when people comes to Noor's Books, to my firm, to do tax planning. We make sure we do this trick, and then you grow this money tax free, and then when you need the money, you reimburse yourself. No matter when, you can reimburse yourself. Now there is a limit on how much you can contribute every year, and that's usually change every year for inflation, like the standard deduction, like other contribution for IRA, Roth IRA, move, all these retirement and accounts. So HSA, again, the change for it this year, they are allowing people who are using Obamacare. If you are on Obamacare and you are, and let me steal this name, bronze or catastrophic accounts. If you are in Obamacare and you are in bronze or catastrophic accounts, you are qualified to open and contribute to HSA. That is amazing. This wasn't allowed for you before. Another thing that was preventing people to have an HSA account, if you have a plan that allow you to use telehealth, like talking to your health professional through online, like camera and stuff. So it used to be you're not qualified for HSA. Now you are qualified. So beautiful. So this is some of the changes about the HSA. Now the second change, or the third now, like we said, the first one was making a lot of things of the Tax Cut and Job Acts permanent. HSA changes, and now number three is you can deduct up to $1,000 per person without optimization when you donate to a nonprofit organization. Now, one thing you need to know, when you donate to a nonprofit, it used to be you cannot deduct anything unless you are itemizing your deduction. And for those of you who don't understand this, so when you do your taxes, there's like two type of deductions mean like after that's going to reduce your taxable income. So for example, if you're making $100,000 for 2025, you have $15,000 itemized deduction. If you are single, if you are married, you have 30,000 itemized deduction. Let's say you are married and you have the 30,000 itemized deduction and you are making 100,000, then you are not taxed on the 30,000, you are taxed on 70,000. Now, if you have more things that qualify to deducting have you like use itemized deduction, like you donate a lot to charity, you have uh, a lot of interest for your mortgage, like over the 30,000, then that's when you itemize. And this is when you can really take an advantage of the charity contribution. Now, the beautiful thing now is a lot of people, like in the past, a lot of people were not able to utilize any charitable deduction. Like if they donate to charity, they cannot deduct it. They think it's going to benefit their taxes, but if they don't itemize, they don't really benefit from it. So what happens now, like with this Trump beautiful bill, as he name it, you would be able to contribute up to $1,000 per person in for charity, qualified charity. That's a, an important distinction. And then you can deduct it without having to itemize. So if you're taking the standard deduction, 30,000 if you're married, now and then you donated $1,000 to charity, now your deduction is $31,000. And of course, the standard deductions grows with inflation. So every year there's a change on that. So this is the third change. Number four, for child tax credit. So this is for most of you with children. Child tax credits used to be 2,000 per child. It's going to be 2,500 per child. So this is great. So if you have two kids, that's 5,000. Of course, that's phased out based on your income. Now, number five, tax credit for home solar panels. I'm going to read this. Heat pumps, windows, EDC need to be completed by December 31st, 2025 in order to take advantage from it. Tax credit for home solar panel, heat pumps, windows, EDC, all these stuff like they used to have. You need to complete it by December 31st, 2025 in order to benefit from it. So if you are planning to do that, make sure you start now, because you really have to complete, not hire the person in December, no, complete the project by December 31st. Number six, bonus depreciation. Bonus depreciation. This is if you have a rental, if you have a business and you have an asset that you are depreciating in your business. So this is for investors, for you if you have a rental property, for you if you have a business and you have assets in the business. Again, Bonus depreciation, what does that mean? And section 179. I'm just going to explain it really quick because I don't want to like make this live really long for you guys. Um, so this is, and please, oh, I don't want to. Okay, here we go. So bonus depreciation means what depreciation means is really like if you buy an asset, for example, no, land do not depreciate. Let's say a home or an equipment. If you paid $10,000 for this land or equipment, land do not depreciate. I don't know why my subconscious saying land every single time. So no, erase that. If you're buying a property or any other asset for your business, computers, equipment like medical equipment, anything that you are purchasing for business or investment purposes, for example, $10,000, you used to have like a period of time based, it depends on the asset that you have. There's different rules for different type of assets. For, oh, let's say just like for an example, just to make it easy for you guys, like $10,000, you purchase an equipment for $10,000. Instead, let's say you depreciate it over 10 years. This is not the rules, okay? This is just an example to make it easy. Let's say the rule was to depreciate it over 10 years. Then that means you're going to deduct a thousand each year for 10 years in order to take that expense, to claim that expense for tax purposes. Now, with bonus depreciation and sections 179, that allows you to deduct the entire $10,000 you paid to purchase that property in the year of purchase, the year that you purchased that equipment or asset. Okay, so that's great because now, like, you are taking this benefit instantly. Like, you don't have to wait for over 10 years to depreciate like a thousand, over a thousand, over a thousand. And like I said, there's like so many rules for depreciations, and it depends on the assets. Like some assets, like um, 27 depreciates over 27 years, some and a half, and some asset depreciates like over 3 years, other assets over 5 years. It depends on the method of depreciation and other stuff. But this bonus depreciation now, it's going to allow you to deduct those depreciation like on 1 year. Now this was phasing out and it was going to expire this year, 2025. But with this bill, this is going to, you know what? I have to verify if this is permanent or it just extended. I don't want to give you wrong information. I have to verify this. Now, number seven, tax on tips. And I know a lot of you guys, you probably heard like about no taxes on tips. So if you are in restaurant, if you are like service provider that you receive tips, there's no taxes on tips. Well, this is partially correct. And don't just listen to random people talking about this. This is partially correct. And it's actually great. Like, it's made for low income and medium income people. So you can technically deduct up to $25,000 only per year. So if you get $25,000 in tips for the year, you get to deduct that. So your income, if your income totally was $100,000, and then $25,000 of this income was from tips, then you'll get to deduct that $25,000. So now that means you are making $75,000 versus $100,000. Now, more than that, like, you get to deduct, of course, the standard deduction. If you are single, your standard deduction, for example, let's say if it was for 2025, let's use that number for now. Let's say it's the 2025, then it's going to be 15,000. So 15,000 plus the 25,000, that means you get to deduct $40,000. So your income now is $100,000 minus the 40,000. You left with $60,000. And if you donated $1,000 to a qualified charity, that's another $1,000 to deduct. That makes your taxable income $59,000. Now you may have some credit or whatever, but now this is gonna make your taxable income not 100K. It's gonna make it $59,000. So it gets exciting. So this is a tip. Like I would tell you, like I always tell my people, you do not pay taxes on every penny you get. It's more than that. It's more complicated than that. Okay. So your taxable income is going to be reduced if you get tips. It has to be real tips, and they trust your employer. So IRS usually wants to verify information by various reporting. For example, when you get your W-2 or your 1099, they also receive it from the person who paid you, for your employer or the person who hired you. So that means they verify and match information. So make sure you report the correct information and make sure you take advantage of everything as you should by working with a qualified tax professional, not just any person who fill in a form. And don't go and fill in the form yourself. And if you are looking to save in taxes for 2025, it is the time, guys, to start thinking about taxes. I do a lot of tax planning. A lot of people like are looking to tax plan to make sure they don't overpay a penny for 2025 when they do their taxes in 2026. And this happens every year. So if you're looking to save on that, feel free to reach out to me, book a time, or just comment. I will send you the information so you can book a time so we can talk and I can help you with your tax plan. So moving forward, now we are on number 7. Now, one thing you want to know about these tips, it's temporary. This is not permanent. The period of time is 2025 until 2028. 2025 until 2028. It is not permanent. So again, don't listen to random advice. Make sure you know what's going on. Now, number 8. Number 8 is about your 1099. So if you are a business owner and you are hiring contractors, you have to issue 1099s. Well, it used to be up until 2025. If you make a $600 payment for your contractor or more, you had to issue 1099 for that person. Now, with this change, what happened is if you issue a payment for $2,000 or more, now you have to pay. Now you have to pay. Not to pay. You have to pay taxes anyway for things. Sorry, guys. Okay. So now you have to issue the 1099. Now, a pro advice, before you even pay any penny for anyone, please, guys, make them fill a W-9. It's available online on the IRS website. You can ask your accountant to send you one, and make sure you don't pay any person without having them fill in a W-9. And if they got $2,000, you have to file 1099 for them. You have to issue them a 1099. Best bro tax advice again, issue them a 1099 regardless. Now, you guys, when you receive the 1099, if you are the contractor, regardless if you receive the 1099 or not, you have to report that income. Every income or every income is reportable. You must report every income, whether you um, whether you received it in cash and checks and and a down payment, like direct payments. No matter the form of payment, you must issue a 1099 for that contractor. But best practices, you issue for anyone, because you want to deduct this money for your business. You don't want to help someone who is committing tax evasion. That's risking going to jail. And if you are a business owner and you're not issuing your contractor the correct form, you want to verify also the information of the contractor. Because you know what? There's a lot of stories that if you do not issue these people 1099, and if you do not have the correct information, you are risking paying their taxes. You are with the penalties. A lot of people would lose their business if they have a lot of these, right? Okay, so I see a question from Julie here. $2,000 total per year or transaction? Per year. So 2,000 per year. So if you pay someone 2,000 per year, and that's not for 2025. This is for next year, 2026. So this year still active, like $600. But like I said again, like, you better issue everyone at 1099 regardless of how much you pay them, because you want to prove your deduction. Otherwise, if you get audited and your deduction was disqualified, guess what happens? You're gonna have to pay the taxes you would have owed, with interest, with penalties, a lot of money. So don't go there. Make sure you cover all your bases, and you make sure you do the tax planning now. Now, this is number 8. Number 9 is also about 1099, but now this is about 1099K. This is the 1099 you get from Venmo, your cash apps, Venmo, PayPal, all of these platforms, Spotify, yada, 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 all of these platforms. Now, remember how that for the last few years they kept saying, oh, the threshold is the decreasing. It's going to be like when they issue you, I believe they said 600. Don't quote me on this, but this is how I remember. And every year they used to, okay, this is postponed for next year. This is postponed for next year. Now it has been made permanent with this bill. No, it's going to be $20,000 per year and 200 transaction on that platform. So if you make from PayPal or through PayPal or any other cash app $20,000 a year, and 200 transaction, that's going to trigger a 1099K they will send you at the end of the year. Again, that doesn't mean you're not going to report the income. You must report your income. But this is going to reduce the paper reduction. That's the only thing they wanted to do. But that doesn't mean it's going to affect you what you claim. You must claim anything. If you didn't get the 1099K, it means simply you did not make $20,000 on that platform for that year, and the 200 transactions. That's what it means. It doesn't mean you did not make money. It doesn't mean you wouldn't report this money. You must report that money. Now, the last change I'm going to talk about today, because I don't want to make this video too long. The last change I'm going to talk about, this is for business owners. And it's a great deduction. We used to have it, and we don't want to lose it. And with this bill, it made it permanent, which is awesome. This applies to all pass-through entities. That means any business owners except C corporations QBI, qualified business income deduction. Okay, it's now permanent. This means you deduct 20% of your net income. So, and in addition to the standard deduction, in addition to all the deduction you may have, you're going to have an extra 20,000, which we already have been using it, but it was set to expire. Now it's not going to expire. It is going to be permanent. Great news for you business owners. So these are the changes that I wanted to talk to you about it today. It's going to affect most of you. Some of these changes will affect every single one of us. Some other changes will affect business owners. Now, let me tell you, since I started my business here, Noura's Books for tax advisory and accounting, I I never seen too many people that do not have a business. Now, you might think you don't have a business, but if you receive 1099 from any freelance you're doing, any 1099 that it's not one time that and is done, like you're doing it regularly, then you have a business, regardless if you registered that business or not. So I believe this gonna apply to over 90% of the American people or taxpayers, if I want to say in the other word. So guys, make sure you go review this video again, send it to the people who might benefit from, because this is going to really affect everything in your tax returns. If you want to make sure you do not overpay in your taxes, make sure you do the tax planning now. Send this video to subscribe to my YouTube if you're on YouTube. If you're not on YouTube, make sure you go there, because sometimes I go live on YouTube only. Make sure you follow me on TikTok, Instagram, Facebook, LinkedIn, all these platforms, but mostly YouTube, because we're posting a lot of things on YouTube that might not be there in any other platform. We are posting like weekly video, a lot of shorts, to make sure. And I'm going to go live every single Thursday, sorry, every Thursday at 3 p.m. Central. Every Thursday at 3 p.m. Central. So if you want to get more information, more tax tips, have questions, please make sure you be there, subscribe to the YouTube, and ask me your questions. Put your questions in the comments, whatever platform you prefer and you are in. Put the questions on those comments, and I'll be going over every comment to make sure I take this in consideration when making other videos and lives. So I'm going to be more active on all these platforms, guys, because I really want to make sure that those of you who don't want to overpay on taxes get the information they need. But again, any advice I give on these, or I don't, any information I give on social media, YouTube, anything, is not a tax advice, because I need to see and learn your situation to make sure I give you the advice that is unique to you and your situation. I want to make sure you are following the guidelines, because if you use anything without following the guidelines, that's going to hurt you. That is going to get you in a big trouble when or if you get audited, and I don't want that for you. So I want to make sure you follow the guidelines, you do what you're supposed to do, so you won't lose any deduction later. You don't have to pay penalties and interest. Thank you so much for all of you who joined me for today. And one more thing, all these changes are for 2025, for this year, but we're not going to see it until when we do the taxes. Oh, I'm sorry, for 2026. Oh no, wait. For 2025, which we'll file, and we will file in 2026. I have to verify this. Don't quote me on this. Um, yes, so I have to verify this. Yeah, it's a long bill, so And it's still new, still we're getting some clarification, but this is I want you to make sure that you get the information. And if you are looking to know how much you can save, you can simply book a call with me. You can go to noorasbooks.com/contact. You can book a call with me. And yeah, if you are local in Chicago, you can visit my office in Oakbrook, and you can get the address from the website. All right, guys. Thank you so much for being here. Have a great weekend. Again, send this video to the people who might be interested in learning more. I'll talk to you later. Bye.